Hello, good morning and welcome to ET Now's The Newspaper Show with me, Varun Hirimath. For the next half an hour, I'll be walking you through the major headlines from the Times of India and the Economic Times this morning. But before we do that, let me remind you that the newspapers are completely safe. There's a lot of misinformation regarding newspapers being a source of contamination for the COVID-19 virus, which is completely baseless and not true. All personnel at the presses are taking the highest precautions, wearing all the required PPE and are well sanitized. So if you are interested in getting your newspaper delivered to your residence, please go to wantmypaper.com where you can explore all the options available for the same. I repeat again, wantmypaper.com. Do take a look. With that being said, let's now surge forward with the top 10 stories of this morning. Display country of origin by August 1st. Government to e-commerce. India may go beyond China to cut cheap shipments. Q1 revenues of Nifty companies may see a 23% drop. Mowtown, government to brainstorm on curbing imports. ICICI Bank to raise up to 15,000 crores via a share sale. Railways draws up a big revamp plan. Merger of 3 state insurers on hold. Improving collections at NBFCs signal a pickup. Hiring may go full throttle by Jan next. And the US tops 3 million infections as cases surge. Okay, the top 5 corporate stories. Fall in subscriber worries, Vodafone idea. Government moves Supreme Court in Bharti Airtel excess GST case. HMSI to defer starting 3rd assembly line. Restaurants ask government to revisit alcohol ban. An advent in a race to buy chem from Microlabs. Okay, the top 5 market stories now. SENSEX snaps a 5-day winning streak. Equity funds see a 95% fall in June inflows. Retail trade soar to a 15-year high. CBDT, SEBI sign MOU on data sharing. And finally, SBI to take digital route to boost SME vertical. Okay, so with that, we are now done with the headlines of this morning. Let's get on with our individual stories. And page 1 of the Economic Times, India Inc.'s biggest companies are set to post their worst sales performance in 9 quarters in April to June of 2020. But profit fall will be cushioned by a better than expected show by banks and consumer firms. Well, Pankaj is now with us. So good morning, Pankaj. Welcome to the show. What do you think is going to happen to the Nifty stocks this Q1 earnings season, and what impact is it going to have on sentiment?
So, Q1 numbers, of course, are going to be weakish, and we all know what happened in the month of April and May, which was, of course, a strict lockdown in the month of April, and then followed by, an extensive reopening towards the end of July. That's why Q1 is expected to be weakish. Not only that, the production was zero, the sales was zero, and a lot of companies, did not particularly start till the mid of June. So, you had about 45 to 60 days of, not working for the companies, demand being very, very weakish. But on the other hand, you'll have companies in the IT sector, companies in the essential space, as well as companies, going ahead into the pharma space or export space, which are having an impact. Certain estimates which have just started to come in expect that, there could be a 57% EBITDA drop for some of the domestic companies. That could be the sort of number. Overall, it could be one of the worst quarter on record in the history as far as the YOY decline is concerned for sales, for EBITDA, as well as for profitability front. But it is something which is known as far as the street.
Right, Pankaj. Thank you for bringing that to our attention. Definitely could be one of the worst quarters in Indian history, like Pankaj just pointed out. Let's just hope for the best. But with that being said, let's move on. Again, page 1 of the Economic Times, we have a story. And according to the Economic Times, India is drawing up a strategy to curb cheap imports from any source and not just China in order to achieve its self-reliance goals. The government is drawing up short-term, medium-term and long-term plans. while in the short term it could opt for non-tariff barriers such as nominating a specific port for a category of goods or mandating prior approval for select products such as licensing requirements. Tariffs could also be raised where possible to impose a comprehensive deterrent on the import of cheap or non-essentials. In the medium term, free trade agreements, FTAs, will be reviewed to bring about a balance in trade and put more effective rules of origin in place. So that's on page 1 of the Economic Times. If you are interested, do have a read. But keeping it with page 1, yet another story, and the government has asked e-commerce platforms such as Amazon and Flipkart to display the country of origin on new products listed by sellers on their sites by August 1st and legacy items by October 1st without stipulating a deadline. The company sought more time to implement the changes, which are part of the government's plan to curb imports. But Parisha Tyagi now joins in with more details on the story. Over to you, Parisha.
Yes, the DPIIT held second round of discussions with e-commerce company to discuss the issue of displaying country of origin on their platforms, and the department had suggested mandating the display for new listings by August 1st and for old listings by September end. The e-commerce platforms, however, were not in agreement with this, as they said they needed more time for resolving different issues. The most important issues lie with the sellers, as there's no accurate mechanism to ensure that the country of origin displayed by the sellers or mentioned by the sellers is accurate. Sellers also are facing several challenges ensuring the country of origin on the products that they may be sourcing through several channels, and there might be cases when they themselves are not sure which channel has certain product come from. So yes, this was the argument put forward by the e-commerce companies in the meeting with DPI. They also said that they need to devise a mechanism to ensure to verify the authenticity of a country mentioned by the sellers, and sellers also need some more time to figure out the actual country of origin for certain products. The DPIIT meanwhile has said that they will discuss the issue internally and have asked the e-commerce platforms to start preparing for displaying country of origin till the department comes up with a further instruction.
Okay, thanks for that, Parisha. Economic Times, page 1 yet again. ICICI Bank to raise up to 15,000 crores via a share sale. So this had been reported recently, and we at ET Now also discussed it a fair bit. See, nothing wrong with raising money right now. Every bank is doing it. There's two sides to the story. One side, your bank needs capital in case anything goes wrong and the markets deteriorate and asset quality concerns creep up. You have large NPAs. On the other side, considering that all the banks, including ICICI, have very healthy capital adequacy ratios right now, a $2 billion raise also means how much pain are you really expecting? So that's kind of, the two ways to look at it. And either way, it's been having an impact on the financial sector, and it's very stock specific. So just an eye to keep out for, when the raise will be complete. Who will participate is very key. If you get some good marquee names in right now, that always helps. So it'll be interesting to see how this closes. Let's remember there's numerous financials right now which will be closing fundraisers or have recently closed fundraisers. Okay. Yesterday, the Amphi data was out, and we know Jayesh always tracks that closely. So Jayesh is with us. Good morning, Jayesh. Welcome to the show. I'm not going to get into the particulars because you can walk us through it. So how are you reading into this number? How is it different to last time? And did it surpass your expectations, or was it a bit of a disappointment?
Morning, Varun. Suffice to say that it has been a disappointing number that the Amphi has declared yesterday. What has actually happened is the net flow has declined to 7,200 crores as compared to 70,000 crores, while the equity inflow has come in just at about 240 crores as compared to 5,000 crores plus in the previous month. Now, that's a substantial 90 to 95% decline that we have seen because of the liquid fund category as well as the equity inflow coming in lower more than 2 years that we have got. The total AUM, however, picked up because of the market conditions in the month of June. Total AUM was 26 lakh crores, while the equity AUM was 6.9 lakh crores. So that was, a little comforting. However, the SIB number, that has been the big disappointment because it has slipped below the 8,000 crore mark for the first time since November 2018. Also, if you have a look at some of the internals, the equity inflow came in at lowest in over 2 years. The equity inflows declined for a third straight month. All the individual categories that are there within the equity fund, they saw a month-on-month decline. And remember that, it is all in the backdrop of the month of June, the market performance that we had for June itself. The multi-cap, large-cap dividend yield as well as the value or contra fund categories, in fact, witnessed a net outflow. So that is a big negative as far as the AMFI data is concerned. Also, the SIP continued to decline for the third straight month. So overall, like I was telling you that, it was disappointing and below expectation from what the market was actually looking for.
All right, Jayesh, thanks so much for getting us that very important update. And this data really is an indicator of so many other aspects for the market. So I hope that it doesn't really have a negative impact, as in any case, Q1's right around the corner. But thanks for that, Jayesh. Let's now also switch gears to retail a bit. And Vinny is with us on the phone. Good morning, Vinny. Welcome. According to the ET report this morning, retail participation in Indian equities has surged to a 15-year high in July as investors have shifted from unattractive bank and corporate fixed deposits to take advantage of the market's sharp recovery from the March lows. Vinny, what do you make of this story and what are the key points to look out for here?
So Varun, like you mentioned, from March lows, look at the recovery in the market and seeing that, people maybe have the fear of, missing out. Plus, they find it attractive to enter in the equity markets compared to fixed deposits, which are very unattractive rates and, unattractive bank rates are there. So, due to that, we are seeing the retail trade, which has surged to a 15-year high, and this time, if you compare the average daily turnover of retail investors in the cash markets, around 39,500 crores in July compared to 7,500 crores of foreign investors and 7,800 crores of DII. So, you are seeing retail investors quite interested in the market and, they want to participate in the market and, in the recovery of the market as well. This is after hitting a 10-year high of around 68% in June. Retail participation has risen to 72% now in the cash market turnovers. And, last time these levels were seen, such levels were seen in 2005. So, that is something very interesting and, that is also catching the eye of retail investors. Now, the Indian equity benchmark also, which had been a laggard to the emerging market pack till May, has outperformed its regional peers in June. So this is, that on the back of this, we are seeing high volumes from retail investors as well as foreign investors also buying. But retail investors are surely showing a lot of investors and even brokers are quite surprised by this and, they expect surprised to see the interest that the retail investors are showing, especially at such a time, which is quite uncertain, but a very surprising time. And, but investors are finding it very attractive looking at the recovery from March lows, and that's why they are maybe investing in the markets.
Right, Vinny. I guess we're all feeling that FOMO, whoever didn't really get in March and April definitely wants to get in now. So thanks for bringing us that interesting little update, and retail participation really seems to be on the up and up anywhere in the world, but here in India as well. Okay, two stories. Page 9 of the Economic Times this morning. The Union Cabinet yesterday put a hold on the proposed merger of the three state-run general insurers, even as it approved 12,450 crore in capital infusion. In a statement, government has said, given the current scenario, the process of the merger has been seized so far, and instead, focus shall be shifted on their solvency and profitable growth. So, capital infusion and focus on profitability, but no merger being allowed right now between these three state-run insurers. Do have a read if you're interested. Okay, page 4 of the Economic Times. a stock that's also been very much in focus and one of, the dark horses, if you want to call it that, in the market. But there's been a fall, unfortunately, in Vodafone Idea's subscriber numbers. And this is now beginning to worry the promoters, who in any case are very reluctant to infuse more cash in this company. The falling numbers have prompted discussions among promoters on the future of the telco. Even if it were allowed by the Supreme Court to pay AGR dues over 20 years, one really wonders whether this one is going to make it out of the woods. So keep an eye out for that. A lot of people focusing in on that stock. Okay, we now are going to be switching to page 6 of the Economic Times to a report regarding hiring. And according to this ET report, hiring across the board is expected to resume completely by January after all. This is after a lull caused by disruptions due to the COVID-19 pandemic. Now, although campus recruitment is expected to take a hit, recruitment firms and career consulting firms have said in a report that was exclusively shared with ET Now that prospects are looking up. So the key points over here from the report are that hiring may go full throttle by Jan next. Companies filling up posts may take 6 months more. Campus recruitment is expected to take a hit. And companies that had paused hiring will rebound as well. So that's perhaps good news of the day coming in as far as the job market is concerned. Let's now switch gears to realty and back to page 1 of the Economic Times. My colleague Vivek is now with us. Good morning, Vivek. Thanks so much for joining in today. The centre hopes to provide rental accommodation for migrants, devised after workers left the cities in lakhs. With more than 1 lakh government-funded houses in several states that are ready to be rented out in the first phase of affordable rental housing complexes scheme, what does this really mean for workers looking for housing, and what's the kind of impact it can have on the sector? Vivek, can you let us know, please?
Good morning. So again, when you're talking about this particular piece of news that's come in the Economic Times, how you're reading into this is really, this is more of an extension of what the FM Nirmala Sitharaman had mentioned in one of the press conferences where she had clearly targeted housing as far as both migrant labour as well as housing for all is concerned. So you could look at this as an extension for the housing for all scheme that the government has been pushing ever since its inception. And what they are basically saying is that given the fact that a lot of migrant laborers were actually facing quite a bit of issues in terms of accommodation as soon as the pandemic hit or as soon as their earnings came to a standstill, what the government is looking to provide is that the government is looking for providing an affordable rental housing scheme. Now, this is something, again, that when you're talking about this, what it basically means is a lot of real estate players are concerned is that given the fact that there's so much high inventory, they would now have to go in for lower margin development projects. And this is something, while yield rates may be capped in this particular segment, you would already also see the government giving them a lot of shops, a lot of push as far as this particular segment is concerned, and also indicate, in the longer term that a lot of migrant labor will get stuck to a particular city where they move in. Overall, a very positive development for the entire sector, and especially given the fact that there is so much gloom as far as the real estate space and construction is concerned, expect to see some sort of activity picking up as soon as this particular project picks up pace.
Okie dokie. Thanks for that, Vivek. And thank you for joining in. Okay. Let's switch gears. Times of India, business page 11. TVS Group may announce a rejig plan for the holding co. The idea is to simplify the holdings on the basis of the ownership in group companies. But Utkarsh is now with us, I believe, to walk us through the finer details of this. Good morning, Utkarsh. You want to... Okay. I'm sorry, I don't think Utkarsh is with us today. So, like I said, TVS Group may be announcing a rejig plan for the holdco. They may be near a family settlement as well over the shareholding, is what reports indicate. There's no dispute in the family, and the settlement will be done in a very amicable fashion. They plan to prevent potential future disputes as well, so there's going to be some clauses set in place. And these discussions have been going on for 4 or 5 years, so quite an overhang on the company. It'll be nice if it can finally lift. We're now going to just quickly get you the headlines in the top 5 from the Times of India. Over 25,000 cases in a day for the first time. Government okay, 1 lakh crore for agri-infra support. MIT, Harvard fight international students ouster. TVS Group may announce rejig for holding co. Will ensure Jadav's safe return, says the Government of India. So those were the Times of India headlines, and do have a look there if you're interested. We're now going to quickly get you